If you are approaching retirement, you have probably heard the word annuity, but most people have no idea what an annuity actually is. Some think it is a scam, others think it is a way to get rich. The truth is in between. Today I am going to give you the clearest explanation of what an annuity is, how it works, and if it is right for your retirement. An annuity is a contract between you and an insurance company. You give them a lump sum or regular payments, and in return they guarantee to pay you income for a specific period or the rest of your life. It is essentially creating your own personal pension. You trade a chunk of money today for reliable, guaranteed income tomorrow. Why choose an annuity? Because retirement brings a fundamental question. How do I turn my savings into income that will last as long as I live? Nobody wants to run out of money. An annuity converts your savings into a predictable monthly paycheck that you cannot outlive. For many retirees in Texas, that peace of mind is priceless. There are 4 main types. Fixed annuities offer a guaranteed interest rate. Fixed index annuities tie growth to a market index but with a floor to protect you from losses. Variable annuities invest in sub-accounts where income fluctuates with the market. And immediate annuities start paying you income checks right away. Understanding these differences is the first step to a secure plan. Let us use a fixed annuity as an example. If you put $300,000 into an annuity with a guaranteed 3.5% interest rate, it grows steadily over time. Most importantly, the insurance company guarantees your principal. That $300,000 is safe and protected, meaning you will not lose your hard-earned savings to market crashes. The real power comes from an income rider. This optional add-on guarantees you a specific monthly payment for life, regardless of market performance. For example, you could buy an annuity at 62 that guarantees $2,000 per month starting at 67. You get that check every single month for the rest of your life. That is a pension you built yourself. I want to be transparent. Annuities do have costs. You typically pay fees for the protection and administration of your income, usually between 1 and 3% annually. Fixed annuities typically have lower fees than variable ones. When I work with families in the RGV, I always make sure they understand every fee before moving forward. Annuities are best for people who value income security over maximum growth. If you have a low risk tolerance, are worried about living a long life and running out of money, or want to convert a lump sum into a predictable paycheck, this is a tool designed for your security. It is about protection and peace of mind. Let me clarify what annuities are not. They are not get-rich-quick schemes or direct stock investments. They are contracts backed by established insurance companies that have been in business for over 100 years. While they are not right for everyone, they are a proven tool for providing reliable income for those who need it most. Take Mary, who was 64 and nervous about Wall Street volatility. She moved $400,000 into a fixed index annuity with an income rider. At 67, she started receiving $2,500 per month, guaranteed for life. Between that and her Social Security, her essential expenses are covered. She sleeps well knowing her retirement is secure. Because annuities come in many variations, the wrong choice can be costly. This is why working with a licensed advisor matters. I ask the important questions: how much income do you need, and when do you need it to start? Your answers determine which annuity is right for you, because one size definitely does not fit all. If you are wondering if an annuity makes sense for you, call or text me at 956-455-1313 for a free consultation. No pressure, just honest guidance. Please subscribe and hit the bell so you never miss a tip. I am Antonio Espino with Espino Insurance Group, and I will see you in the next video where we calculate exactly how much income you need to retire comfortably.